All right, so let's go ahead and get started. Recording is on. Today is Monday, February 8th. This is the 12:30 section. Um, we're going to basically spend most of today talking about the solution to homework 2. But as we get started, just a couple of reminders. First reminder is this Friday, your BMC certification is due for all sections. So for your Bloomberg certification, remember what matters is not the PDF. I don't care about that. That you'll get anyways as part of your certification. But you have to complete all 4 modules with greater than a 70% score. So that's the screenshot that you have to submit and show. You can submit the PDF if you want, but if you don't have 70% or more on each of the modules that are required, then you will not be considered certified. You won't get the 5 points. And it really is all or nothing. So make sure you submit that by Friday. Remember, you can only take one module's questions for the 70% one time. So if you kind of blow through the module and you didn't answer the questions correctly, you will need to create another email account to redo that section. Because otherwise you can only have one email account, umd.edu email account per section one time as you go through and take that quiz. So you'd have to submit multiple screenshots. Anyways, that BMC certification, again, turned in no later than end of day Friday. That is on Elms. Also, again, on February 22nd, as a reminder, Bloomberg will be here for advanced user training and recruiting. So they'll be here all during class on Monday, February 22nd. And next Wednesday will be your first team project presentation. So I'll go ahead and share my screen here for a second. So if you look at the assignments, I'm actually going to change the company. I know it says CVS in here. That was a carryover from last semester. But your first group EIC project is going to be presented on February 17th. So if you look here in people and you go to teams, this is section 201. So these are the 6 teams in section 201. And if you haven't already, you should look through here and find what team you're on and start communicating with your teammates, because you should have already started the team project with the Bloomberg trading challenge. But going forward, if you're not on a team, you can't pass the class. And I am going to have peer reviews. So make sure you participate on the team, because you can't get credit for your team grade if you don't participate with your team. But regardless, the first team presentation, of which there will be 4, will be next Wednesday. And so basically, you'll do an EIC analysis verbally as a PowerPoint presentation. Each team will have 10 minutes. We'll go through the 6 teams in this section, 6 times 10, 60 minutes. So it'll take pretty much the whole class. And you'll get a grade based on the verbal presentation for the EIC in your PowerPoint deck. So you won't have to do a write-up. It will just be a team presentation. Most likely you won't have all of your team members do the presentation, so you can decide which team members are going to present, but nonetheless they'll be presenting on behalf of the team, and it will be a team grade. And if you're not presenting, you should help in contributing to create that presentation. But that first team project, again, a week from Wednesday, it'll be an EIC on a company to be given shortly. And as I said today, we're going to go through United. So questions about any of that? Hopefully pretty straightforward. All right. In addition, I wanted to also mention, go back to Bloomberg here for a second. And if I go to idea or team message, you should have started the trading challenge. Let's just see kind of where we stand for section 201. So these are the teams. We're going to score you based on portfolio value. So right now, all of the teams have positive return so far as of today. I'm going to be disqualified because I wouldn't meet the minimum criteria. I already have too much cash and I'm not going to make the trades. That was just the sample trade I did in class. But basically, you need to have at least 10 longs in the first half of the semester. So 5 of the 6 teams have met that requirement already. This team only needs to make 2 more trades. Everybody had to be less than $300,000 of cash. We've all met that requirement. You get to stay invested, but this is kind of how we are doing. When your team leader, team captain basically goes to this screen and selects it, they won't see the names of the other teams. They'll just kind of see the relative ranking of the other teams. But I'll go from here from time to time just to kind of see how we are doing. And this is the ranking as of today. So again, any questions about the Bloomberg Trading Challenge? All right. So if no questions about Bloomberg, then let's talk about homework 2. So we were basically going through an EIC of the airline industry and of United Airlines in particular. And we would have started with the E in the EIC. So the first thing you would have done for the assignment under RV is you'd have gone and I told you to use this peer group, Analyst Curated BI, BI North American Airlines Industry Index. These would be the 14 companies. The first screenshot, you'd have gone under markets and then beta. You'd have made sure that you had the industry weighted market cap weighted average is the first line, and then the other 14 airlines thereafter. And so this would have been the data on file, take screenshot, save that you would have taken and submitted. Okay, so that was the screenshot you needed for the E in the EIC section. So let's talk about the E. What did you guys say for United? Or the industry, I should say, the airline industry. How sensitive to changes on the economy are there? I think we had a general sense by what we had talked about previously, what's happening in the economy, but what would we say about the airline sensitivity?
They're really sensitive.
Okay. And what data is helping you answer that question?
The beta, that's over 2.
All right. Specifically, what's the beta again that you looked at?
For United, 2.47, and then for the average, 2.07.
Okay. So again, not to be redundant, but very important you use numbers because I'll say it again a different way. If I'm looking at the screen, I see a whole bunch of data and you say it's a high beta above 2. There's a lot of companies with betas above 2. So am I really certain that you're referring to United? Only if you use the 2.47 number do I understand that you're actually referring to United and the industry 2.07, because you could be referring to the 1.72. So again, I just want to stress it's not only for the grade, which is required, but it's also just in general, it helps better presentations. So again, what does a beta of 2.07 mean? Just to refresh.
It means that the stock, or in this case, the weighted market cap weighted average of the airline industry moves twice as much as the S&P 500 index.
Yeah, in both directions.
Yeah.
All right, so we established that. So let's go back to the E. Why? What's going on in the economy right now that is going to really affect these sensitivity of these airlines? So what are some of the economic issues that are going to be important to the airlines?
Well, there's a pandemic going on at the moment, and not only that, but the interest rates have been greatly reduced as well. So that's affecting everybody in their business at the moment.
Okay, and specifically, it's affecting demand downward. Like there's just less people traveling, so it's the dearth of travel that the pandemic has caused. What other economic issues are relevant to the airline industry?
Oil prices.
So tell me more about that.
If oil prices increase, it becomes more costly for airlines to pay for their fuel
And why is that important?
because it'll drive down profits, which will likely make the stock go lower.
But so will higher labor costs. Why is oil so important?
Because it's determined by a few producers globally, and it's indispensable to the airlines.
No, I mean the other way. Why is it so important to the airlines?
I'll just say it accounts for around like 20% of the airline's actual cost for all
There
of
you
the
go.
airlines.
Give me that additional context. So for fuel, which is about 20 or so percent of the airline's cost, 20 to 25%, then higher oil prices are what is hurting this industry. All right. So it's going to be sensitive to the price of oil. And if you've been paying attention, you can actually see it here, price of oil. Do a quick search. Maybe graph it. But we can see that particularly in the last 6 months, oil prices have gone up from $40 a barrel to almost $60 a barrel. And so again, if 25% of 20 to 25% of my costs are this, and the costs are rising, it's not a good time for the airline industry to see oil prices rise. But just in general, this industry is very sensitive to oil prices. So look historically, when oil prices were to 2013, when oil prices were $100 a barrel, the airline industry was doing really poorly. And one of the reasons why the airline industry started doing well again is because oil prices went from about $100 a barrel to about $50 a barrel. So when oil was cut in half and had been at this level for a while, the airlines were actually kind of feasting. And now, even though it dropped even further, which helped the industry, as it's starting to rise again, it is short term, relatively starting to put pressure back on the airline industry again. But nonetheless, sensitive to changes in oil prices. What else can we say about the E that is relevant to the industry? I mean, if you went to UAL US Equity and you did a BICO and you started scrolling through here at an industry level, you know, one of the things that you would have seen is the big drop in seat capacity, which was probably related to the demand and travel, which evaporated in 2020. Right. So we saw a lot less seats because there were a lot less planes, because basically demand had plummeted between 60 and 70% for the average airline. Right. And it wasn't just business travel, which plummeted. It was also international travel, which had plummeted, and it was leisure travel, which has plummeted. So it's pretty much across the board. All of the things that were affecting the airline, kind of a macro business, went negative pretty much all at once. And that had a very big impact on the industry, which is probably another reason why its beta was so high. Because basically, as the market has struggled in the recessionary times, then we actually see the airlines fared much worse because of the problems at the macroeconomic level. Questions about the E? So again, as we start to think about it on a forward basis, we are seeing some stimulus, which is affecting the economy. We are, though, seeing, and as if you saw on Friday with the jobs report, unfortunately, very persistently high levels of unemployment. I think we're still down 10 million workers from where we were a year ago in the US in terms of the economy. And that still weighs very heavily on the airline industry in terms of not only the lack of work and the lack of business travel associated with that, but also the pandemic in general, which has suppressed overall travel and demand. And unfortunately, as we start looking at the virus, it could still be another 6 to 12 months before we start moving in the direction of a return to travel normalcy. If you were paying attention to the virus data that came out, the one discouraging data was the one of the vaccines. I believe it was the Glaxo vaccine. I think they were talking about this in Bloomberg this morning. Go back to the top news. Basically, is not effective against the South African variant. So basically, they actually said it pretty much doesn't help you to have the vaccine against that version of COVID as we start to have other strains. So that could be a potential setback as we start looking at these vaccines. Data is inconclusive on what they're saying with the Pfizer and the Moderna virus against some of the COVIDs. But unfortunately, this other vaccine is not as strong. And the other dangerous thing that kind of came out in the data is that people in South Africa are getting COVID multiple times. Like the COVID strain in South Africa and the COVID strain that's prevalent right now in the US. Unfortunately, even if you get COVID in the US, you can get COVID again with the South African strain separately. Like you don't have immunity towards that. And that's actually kind of depressing. But regardless, that might affect air travel a little bit longer if that becomes prevalent. And so essentially the virus vaccines that we have don't become as effective. So something to keep an eye on as we look a little bit more long-term in terms of what's happening with global travel. All right, anybody else mention anything else on the E? Well, then let's move to the I in the EIC. So again, when we look at the industry, RV, we would have come over here to custom, and we would have had our spread template. And so I can't remember which section I did this last week, but to help actually do the spread template, I had stuck in here a custom field in Bloomberg or custom formula. And so just as a reminder, when we look at data, we can look at data pretty much any way we want using the Bloomberg standard fields, but we can also create custom fields. And this is something you'd have learned in your Bloomberg BMC certification. But the way to do it here on the RV screen is you can use this little gear icon, and it's called a formula, right? So the idea is I can create these custom formulas, which are unique to my account. And these are historical custom formulas that I have created. Okay? And so I actually create the custom formulas or fields here in this kind of text box. Now, since I'm not going to be familiar with the Bloomberg database field names, what I can do is I can look up a database field in Bloomberg, either existing field or custom field. I can do custom fields and custom fields. But let's say I looked up ROIC, just like I was doing a screen in ROIC, and I wanted the one as the latest filing, and I hit enter. What it's going to do is it's going to put, when I hit enter, into this equation field, ROIC in the Bloomberg equation. So this is the database field for ROIC, $RR710, as of the latest filing. So it's a time series. So this is the one that's the latest one. And then if I'm doing a spread, I want to take ROIC minus WACC. So if I put in the field minus and then the WACC, and again, hit enter, the field in Bloomberg for WACC is VM0 $VM011. So this is latest fiscal year ROIC minus the WACC. And you can see down at the bottom, that's kind of the friendly names of what I've created, right? And when I'm ready to save this, I can save this or save and use it in my screen as a custom field, which I will call spread. Now I'd already named this spread, but here's the point. When I save spread over here in the custom list, my spread is now available. So that if I save and use, spread pops up here as a column. So when I add a column, in addition to my existing Bloomberg fields, I also can put in my own custom fields. Now remember, the custom fields are unique to your account. So if I, Joe, Professor Perfetti, create a custom field, it's not in your accounts, right? But it's in my account and I could actually use it. So again, just an easier way to see the spread as we're talking about this. So I can visualize it and not have to worry about doing the math. So back to this. For the industry, this was the screenshot. Again, obviously you'd have done yours without the spread, but given the screenshot, is this an attractive industry? How would we have answered that in the I section?
No, it's not an attractive industry because the industry has a negative spread of negative 26.36%.
Based on the ROIC of 18.41 minus the WACC of 792. Okay, great.
Yes.
So back to this negative industry, we now have to explain this horrible spread with value destructive spread with the 5 forces. So what did you guys say about the 5 forces as it related to explaining why it's such a negative spread? So what were some of the things you said about the 5 forces?
I basically said that the threat of new entrants was low because the capital requirements extremely high. Then I said there's a lot of rivalry and competition because the customers can see all the prices very easily and book it through a third party.
All right, I want to stop you there for 1 second. So just to make sure we're all understanding the point. So is this Jake that's saying this?
Yeah.
Okay. So go back to barriers to entry. So the barriers to entry are high. It's hard to get in this industry. Is that what you said?
Yeah.
All right. I don't disagree with you. That is probably a true statement about the airline industry. But here's the follow-up to that. Does that explain the negative 18% ROIC and the negative 26% spread?
No.
How much of the high barriers to entry matters to that, in your opinion?
Well, I mean, it could affect ROIC because if you invested that capital into newer aircraft, but you're a smaller company that doesn't really get a lot of demand, then that could lower your ROIC.
Okay. But right now, and so I use those words with an underline, right now, is the barriers to entry hurting this industry right now?
No.
Okay. So what I want to distinguish as you guys go through your answers is there's the generic, is the force weak or strong? So I don't disagree that generically, the barriers to entry are very high to this industry, and they'll probably stay high. But does the barriers to entry really explain why this industry is performing poorly right now? No, it does not. And so the first thing you got to understand when you do a 5 forces analysis is not every force has equal weight. And there's a context to that force where in a different time, that force might have a bigger impact than it does now because of what's happening with the pandemic. And that's what I need you to articulate when you do the analysis. So I don't want you just to go generically, oh, well, the barriers to entry are high, let's move on to the next one. It's like, well, are those high barriers to entry actually affecting the industry right now? And the answer is they're not. Okay. So that's the context at which I want you to also give the answers. Does that make sense? Everybody, questions about that? All right. So again, Jake, you're doing a good job. You're welcome to continue on some of those other forces, or somebody else can jump in, but I just want to make sure everybody knew that point.
I argued that the bargaining power of buyers is really high because people usually just book whatever flight is cheapest. There's low switching costs in the industry. There's no really customer loyalty to a specific company. So when you kind of book a flight, you just sometimes do it through a third party, or you just kind of look for something really what's the cheapest to get you to your destination. So I said that had probably the biggest effect on the spread more than any other of the five forces.
Okay. And again, I agree with you, but I think even now we have more power as buyers than we did a year ago. What evidence in the marketplace makes it even more evident that we have more power over the airlines than we did before? What's even changed in the last 12 months about airfares?
They've dropped like crazy.
So number one, the prices are much lower because no one's flying. So there's such little demand that they've had to slash the price. But they've made a couple other fundamental changes that has been beneficial to customers.
There are airlines now like Spirit Airlines where they cut their costs down to the bone to give the cheapest price possible to customers.
Okay.
So yeah,
That's part of it, but I'll just mention that prior to the pandemic, airlines actually made more money on fees than they did on flying you on the tickets. Fees were extraordinarily profitable. They had fees for everything. How has that changed?
I'm not sure if this is true, but I think that some airlines might be giving you like a free, like the ability to change your flight unless something like if you get sick or something for free, where it used to be like something you have to pay for, like the flight insurance.
Absolutely. And so they've given you either refunds if you don't travel, or the ability to basically change an unlimited amount of times without paying any fees. That's a big deal for customers, and it essentially shows that we have more power, and that's taken away a big source of income from the airline industries. So not only have they lowered their price, but they've essentially eliminated right now the change fee, and they've given you tremendous flexibility to move your flights around without having to pay penalties. And that is a big change in the airline industry that kind of works against them, mainly because of that loss of power relative to the buyers as well. That's one of the big reasons why their ROIC is low. Why else is their ROIC low? What's going on with the other forces?
I would say that the supplier power, suppliers have a lot of power, as we talked about before, with the rise in oil prices. And on top of actual like suppliers such as like Boeing, like providing the actual aircrafts.
All right, so let's break them out into two segments. So one, the fuel costs are working against them, and there's not really much they can do about that. I mean, they can hedge, but can't hedge forever. So that right now is working against you. But what about Boeing and Airbus? Like those are really the only places you're going to buy planes. So again, obviously, there's a lot of power that Boeing and Airbus have because it's a duopoly. But is that hurting the airline industry today? Are Boeing and Airbus responsible for this big negative spread?
No.
Why not?
Well, I mean, in terms of ROIC, I guess you could say like Boeing and Airbus control the prices, but they're not really the ones that are affecting how much people that they could fit into the plane.
Well, how many new planes are actually being delivered right now?
Not many.
So that's the point. Like what these airlines have had to do is because we've had such a drop in demand, they're literally parking the planes in the desert. They're not flying all their planes. So the idea that they're going to buy more planes from Boeing and Airbus, they're postponing or canceling those deliveries. And so I go back to the same point I made about threat of new entrants. Like historically, yeah, okay, there's two suppliers of planes, and that tends to help the suppliers and kind of hurt the industry, right? Because there's not a huge amount of competition between Boeing and Airbus because they're a duopoly. But the other side of it is right now, because there's no need for supply, then it actually is the supplier power is not really hurting the industry because prior to the pandemic, like Boeing had screwed itself over because it had all the dangers of the 737 MAX and being grounded with all the crashes. And then with the pandemic, nobody wants any 737s because there's no demand for them. They don't even want the 737 back, even if it can fly. And that's become a big problem for the suppliers because right now, who are you going to sell these planes to? So the supplier power is not why the ROIC is negative. So it's not supplier power. It's not a barrier to entry. It's the buyer power has shifted because of supply demand balance. What about substitutes?
One thing I talked about was how the travel is probably going to be really far down because people found that Zoom is just as applicable, like just as useful. So they may not have to go and travel across the world, and when they can just hop on a Zoom meeting and get the same exact thing.
Yeah, and if you saw back to the BICO screen, that big drop in business travel, one's because of the virus, and two is because the surge of what are the substitutes to business travel? The meetings we're doing right now, all these online meetings. And that has basically been a giant substitute, which a year ago, if we were having this conversation, and I were to ask you whether or not Zoom and WebEx and Microsoft Teams were going to basically disrupt the airline industry, we would have all joked about that. And now it's become very real as to how much that has become a giant substitute to business travel and to work travel in general. What's another substitute that's impacting this airline industry more so now than it did before? So we got the online meetings. That's one, but what else? Another big substitute.
I don't know if this was what you're thinking of, but I think maybe like Amtrak and just like long distance trains, because I know that's a big thing in this new administration to try to boost the amount of trains that are around the country.
Sure, but I think Amtrak is struggling in the pandemic, but there is something that actually people are doing a lot more of. Let's say I had to go to Atlanta. How do I get to Atlanta from DC?
Road trip.
Drive. People are driving more. So, and they're driving on these long distance drives. So people are saying, look, I might be willing to drive 5 to 10 hours in a car where before I think about the plane. And right now in the COVID world, basically people are driving more. So you're seeing two things. One, you're seeing passenger travel and cars that have become more viable for certain distances than airlines. And then two, you're seeing the idea that people aren't traveling at all and they're using substitutes of online meetings. That's become a substitute. There's one other substitute, which is affecting more of what I would call the affluent. So if I think about the people that had money that travel, What's the substitute that's affecting these mainline airlines now by them? What are they doing instead?
Private jets.
That's the other market that's booming. And that's become a much more viable substitute because the cost of flying private has come down and the availability of private jets has gone up. And particularly because of the virus, people are more willing, particularly the people with some money, are willing to spend on private. And so that segment of the market is actually becoming much more viable versus flying a commercial plane. And so that's something that we didn't see not too long ago, right? And so that's become a threat to this marketplace. What about the rivalry? What would you say about the rivalry?
It's very concentrated among like the 4 biggest airlines.
Yeah, they're over 80% of air travel in the US. The 4 biggest airlines represent 80% of flights or more. But what else can we say about the rivalry? How does that explain the spread right now?
I would say, I guess, just because of the such a lack of demand, they're sort of racing to the bottom in terms of like how many benefits can we provide customers and how low can we get our prices and stuff like that.
Yeah.
Which will significantly decrease the spread in the industry.
And has significantly.
And has, yeah.
Yeah, exactly. So that's what I want you to then think about this. So let's work backwards and summarize these things. We got the race to the bottom, as he just said, in rivalry because of the lack of demand. And so we're fighting out with price with all the customers. We've essentially, this has led to power in the buyer's hand, not only in low cost tickets, but it's changed the idea of switching costs with the idea of the ability to basically have flights with no change fees and refunds, which has hurt a big significant part of the profitability of the industry, which was fees historically. And the substitutes have gotten very viable to business travel and to some degree leisure travel. And that has further in the short term hurt the industry. Those 3 forces probably explain this negative 18% spread. It's not the power of the suppliers, it's not the barriers to entry and exit. Those should actually be impacting the industry long term, but the short term, they're not mattering as much. Right? Supplier power does not explain what's happening today. I'm not saying supplier power is not going to be an important function long term, but today supplier power is not hurting this industry. And the other thing that's not hurting this industry right now are barriers to entry. Should be helping this industry in a way, but you're not seeing anybody going to say, oh, now's the great time to start an airline. So in a way, I guess you could make an argument it's helping them, but that's not why they're losing so much money. They're losing so much money because of those other 3 forces. The pandemic has changed the relationship with the buyer. It's intensely increased the rivalry, and it's made substitutes the way that we're actually doing things versus traditional travel. And that in the short term is why we have such a negative spread. And so the question then becomes, looking to our crystal balls, 5 years from now, will any of those forces change? And will the spread change as a result? So what'd you say about 5 years from now?
I would have said yes. And I said in my thing mainly because, like, for example, like maybe the substitutes, people are going to start feeling more comfortable flying again. So there'll be less likely to use cars, and maybe business travel is going to start to increase as well. I know when you look at the forecast, they did seem that they thought the market was going to go up over the next 5 years in this industry. So I think they're also projecting the similar things as well.
So one of the things that we might want to consider, and I'll put it in here. So I'm going to add a column. And what I'm going to look at is the ROIC. And what I'm going to do is I'm going to go to a customized period. And we're going to go to years ago, and I'll go to 2 years ago. So the point is, when we think about what 5 years from now looks like, the problem with now is not normal. So one of the things that we might want to do is to understand what is more normal for the airline industry, because we're so far off when we think about the change for 5 years. So the point is, the spreads are going to have to eventually turn positive. Otherwise, this entire industry is going to go under. Like, the airlines are going to make it if the spreads maintain this level. So obviously the spreads are going to get better, right? So hopefully they'll turn positive. And so the question is, this is what approximately, you're looking at an approximate ROIC 2 years ago. And I'll go with ROIC customized period years ago. Where is it? Calendar years ago. 3 years ago. So 16.5%, 13%. That was the ROIC 2 and 3 years ago. So the point is, where are we going to end up in 5 years? So this one's a little bit trickier, because we're not just comparing it against today. We're comparing it against a return to whatever we define as normalcy, and to understand, are they doing kind of better than they did pre-pandemic, about the same as they did pre-pandemic, or worse than pre-pandemic? So let's kind of try and answer it in that context. What do you think? Are the airlines going to do as well in 5 years with the forces as they did pre-pandemic?
I personally don't think so. I think that it will definitely get better, but the COVID pandemic wipes them out a lot quicker than they're going to be able to rebuild, just because of the precautions that are going to be in place and the continued concern for transmission of viruses. So I think that it'll be a much longer recovery than just a few
So
years.
put that, I don't disagree with what you're saying, but put that in the context of the 5 forces. Therefore, what would you say about the forces based on those comments?
So I think that, all right, so as coronavirus starts to go away, there will be an increased demand for the airline services. And as the demand goes up, the buyer power will begin to decrease. But I think buyers will still hold the cards for the most part in the near term.
So relative to where they were before, the buyers will still have more power because
Yes.
of the changes. There you go. That's what I want you to say. That's the way I want you to express that opinion. Matter of fact, what's going to happen to substitutes? Do we just say, to heck with the Zoom, I'm traveling again?
I would say that a lot of companies, especially who pay for people's travel, it is happening with real estate too, but are realizing that Zoom is working perfectly fine for a lot of these meetings, and this will perhaps significantly reduce business travel, thus reducing the ROIC in the future.
So the substitutes actually might stay stronger in the future than they otherwise would.
Correct.
Matter of fact, what do you think about private travel, private jets? Does that market subside or continue to grow?
I said not only private jets, but I was talking about like electric vehicles, that what you were mentioning earlier, people are choosing to drive, but
Mhm.
with increased health and safety concerns, I was going to say people would rather drive, like have autopilot on and drive long distances, and then when they get there, they have their own car instead of having to rent a car.
Okay. So that also spills into the ecosystem of travel, which hurts companies like Hertz and Avis and such things. But regardless, both of those say the substitutes remain stronger than they were historically, and the buyers remain stronger than they were historically, which will put pressure on the industry spread versus where it was historically. So it goes better, but maybe not as good as it used to be. It's kind of the way that I would interpret this. Right? What about supplier power? Does supplier power matter in 5 years? Does it matter more?
I would say, yeah, it does have a big impact, especially considering what is going to happen with Boeing if they continue to struggle.
So yeah, it depends on whether or not the airlines need more jets. And so it depends on how fast demand recovers. So if demand does recover, then the supply demand balance probably tips more in favor of Airbus and Boeing. If demand doesn't recover and they don't need more jets, or at least not the same rate, then it doesn't really tilt as much. And that force does not matter as much. And so those are just things that we would have to start to think about. Matter of fact, same thing with barriers to entry. Do barriers to entry really change in 5 years? Do you think it'll become easier again in the airline industry?
No.
All right, so that's going to benefit the airlines. So the players that are here are probably not going to see a lot of new competition from traditional airlines. Their competition is coming from substitutes. That's who they have to worry about in the marketplace. How viable the substitutes are, how much people are willing to travel again in 5 years, how much the demand is going to recover, and how much competition amongst these players for that demand. Those start to become probably the questions that matter as we start to think about our ROIC WACC combination going forward. All right. And so when you distill it together, then you come up with the idea that, well, spread is going to be about whatever. And in this case, I probably wouldn't compare it to today because obviously it's going to be better than today. All right. Or we're in a deep world of trouble. But realistically, the question is it going to be better or worse than it was a couple of years ago pre-pandemic? And I think the answer is it probably would be a little bit worse even than pre-pandemic levels. Right. And I think that's what we'd probably come up with for 5 forces for the airlines. Questions about any of that? So whatever company I give you for next week for your group project, what's important to understand is I don't want you to give me the generic, here's the force, right? What I want you to also give me is the context of that force based on the data that you're seeing and relate it back to some data points that you're seeing in the real world. All right, what about the C, competitive advantage? Does United have a competitive advantage? What did you say for your answer today? Does United demonstrate competitive advantage?
I said they did.
Because
So I said they did because they had a better spread than all but 5 of the airlines, and the 5 airlines that did not, that the 5 airlines that did have a better spread than them, their market cap was half of United's.
okay, but also their spread was less negative than the weighted average. So that would be the other way to illustrate that point. Okay. Why is United doing relatively better than their peers? What explains that spread being less negative?
I would imagine this is most likely had to do something with internal, that they're just able to find ways to cut their costs better than like American and Delta have.
Okay.
They've done a really good job matching demand, so they've decreased their plane fleet and minimized overhead costs.
Okay. So in the short term, they were really good about cutting their fleet. What else? Well, I know one of the other things they did is they were one of the first airlines to kind of monetize their frequent flyer program, Mileage Plus. Got a big loan against that, which kind of helped them in the short term with raising some cash. So obviously their frequent flyer program had a lot of value in the marketplace. So relative to their customers,
Would that be considered a switching cost?
that is absolutely a switching cost in this industry, these frequent flyer programs. But having that high switching cost could also be in addition to a competitive advantage, because I want loyal customers who don't want to switch. why might United do better or worse in the future? So how is United going to end up as the airline industry recovers? Will they maintain their competitive advantage or not?
I mean, I'm just speaking from experience here. I just know they were one of the best to handle the pandemic when it first started. Like, I know a lot of people felt like they were very appreciative of United, which could go a long way. I know like they were helping people get onto planes that were stuck in Europe, and like while like Delta and American were still charging people to switch their flights, when United was just trying to keep it cheap. So I think in the long run that probably helps United, even though it may have been a short-term loss.
Okay, that definitely helped them. What else may or may not help United? I mean, I don't know if you, again, back to news headlines, but their cargo business is booming right now. And instead of flying people, they're flying cargo. And particularly, they were one of the first airlines to manage the distribution of the vaccine. So the Pfizer, the Moderna vaccine being flown around, United was one of the airlines that's been heavily involved in those logistics. So they're having the ability to manage cargo a little better might actually benefit them a little bit more longer term. The other potential advantage for United, just unique to the airline, is their San Francisco hub. When you think about international travel, which has been devastated, they're very strong in flying to Asia. And so if post-pandemic, we return back to more normal commerce, like the trade between the US and Asian market is something that you could see United benefiting from, because those were much more lucrative routes than even US Europe. And those long haul flights to Asia, United had the highest market share. So particularly on the business travel side. So that was actually something that could be a benefit to United longer term when we think about if business travel does return to some level of normalcy. United is kind of poised to do well more so on the international side. They also are pretty strong to Latin America. So, so again, we'd have to come up with some point of view about what we think is going to happen to the spread. My thought is that this might actually help, given we just said, United stay a little bit better than its peers going forward. But again, we could also make an argument in a different direction. But that's the idea. We'd have to basically talk about that and give some rationale and some data associated with that when we talked about the change in the future spread. That's what we need to practice on with EIC. All right, questions about EIC for the airlines or for United? All right, so if no questions, then here's what we're going to do. On Wednesday, when we come back, I'm going to put you into teams. We're going to just do an in-class practice and practice again on another company, another industry, just kind of work it through in class, just as a way to get you ready for your presentations a week from Wednesday, which is 10% of your semester grade on the company and industry that I will be assigning. And it won't be CVS. I'm going to change that because I did CVS last semester. In any event, questions about any of that? If not, then I'm going to give you back a few minutes of time, and then that will end class today, and we'll see everybody on Wednesday.
Thank you.
All right, have a good day.
Professor, can I just ask a real quick question?
Okay.
What does EIC stand for?
E's economy, I industry, C company.
Okay, thank you.
Sure.
I just thought of one actually related to what you were talking about earlier, how more people are driving. It seems like evident, basically to me, that more people would be driving. I've of course done it more, but I'm wondering, like, is there any like where would you find data on that?
That's a great question. I
Is it
don't
based
know.
on like gas stations or something?
There's probably some data if we poked around on Bloomberg. I've just seen anecdotal data, but yeah, there's probably data on that in transportation for cars. I just don't know where it is at the fingertips, but yes, that would probably be good supporting evidence of that. Because then the call would be whether or not that stays true longer term.
Okay. All right. Thanks.
Sure.
Take care.
Yep. See you on Wednesday.
See you.